It'll just go ahead.
Okie dokie. All right.
Now I'll watch this.
Yes, ma'am. Okay. Welcome everybody. Welcome, welcome, welcome. Tonight is.
Oh, it is recording. It's recording. Sorry, it's recording.
It's okay. Tonight is our beginners training. If you guys don't mind, I am going to record the training for you all, so it will be published in the beginners group within 24 hours for you to review. If for some reason you have more questions after tonight, please feel free to inbox one of your secret society members. Right now we have Chastity, Candace, and that's all I see. So right now we have myself, Chastity, and Candace on the Zoom. You can inbox us, or Jason's gonna be holding a recap on Saturday. You can hold your questions to then if you so choose to, and ask it on the recap on Saturday. All right, so without further ado, we're gonna be going through, somebody pick a pair other than UJ, because I got my UJ already marked up. So somebody
UCAD.
UCAD. Okay, I never mark up UCAD, so that's fine. Don't ask me why, I just don't.
Well, Canadian had some news today too, so the UCADs or Canadian peers were moving a little bit too.
Okay. Alrighty. All right, ladies and gentlemen, so we're going to be looking at this evening the USD versus the Canadian dollar this evening, and we're going to be doing what is called a top to bottom analysis. What that means is that we're going to look at every aspect that is possible for you to be able to get into a trade properly without hopefully losing money, as long as you follow the steps and the guidelines. So if you are in the beginners group and you've been in the beginners group for a little bit, you should have access to the beginners folder. In the beginners folder, you'll find this lovely setup of PDFs and videos. You do need to go through those things because it has your chart patterns, it has your trading plan, it even has what top to bottom analysis is. So you do want to make yourself very, very familiar with what's in your beginners folder, because as you progress through the Currency Guys training plan, you will go from beginners to advanced and on to secret society. So you want to be very versed and knowledgeable of everything as you move along, because just like any other math class, because that's basically what it ends up being, everything builds on top of one another. Just a second. Everything's going to build on top of one another. So let's start with what top to bottom analysis is. Top to bottom analysis is where we're going to identify the different charts and what they mean. So our daily chart is for direction. We identify highs and lows on all of our charts, but daily chart is for direction. So basically, when you're looking at your daily chart, you want to see how the pair that you have selected is moving. Is it bearish or is it bullish? Then you want to look at your 4-hour chart, and we use our 4-hour chart for momentum. We use our 1-hour chart for take profit and stop loss. So where you decide how much money you are going to make on a particular trade, as well as how much money you are willing to risk on a particular trade. Very important. You never want to risk more than what you gain. So, and you also want to use proper risk management. You never want to over leverage your account and end up blowing your account. That's not the name of the game. That's not the object of what you are trying to accomplish here. Also, our 15-minute chart is for entry. You got to know how to get into a trade. Utilizing the swipe trades and everything else that comes with iMarkets Live is wonderful. But the one thing that you will never be taught through iMarkets Live pretty much is your entry. So you got to know how to get in the market in order to be able to trade. So you will learn that here with Currency Guides, and we will show you the proper way so that when you enter into a trade, you're confident as to what you're doing. First things first, we use TradingView.com for our chart setups. By using TradingView.com, you have access to it not only on your desktop, you have access to it on your laptops, your tablets, as well as your phones. So you'll always have access to your charts once you have them set up. The reason being is why you want to have access to your charts is if you get an alert and you have set an alert of when you are going to get into a trade when the market hits a particular area. If you're not at home or you don't have your laptop, you're still going to try to enter it through your mobile device. So you want to make sure that you look at your charts to see if it confirms everything on your checklist, which is also in your beginners folder. So first things first, you just want to go to tradingview.com. So you can open up any tab, doesn't matter. So Google, if you have an iPhone, not really sure what they use, Siri or whatever. All right, sorry about that. So you want to just type in www somewhere. Yeah, there you go. .tradingview.com. Well, mine pops up automatically, but you know, just type it in. Then once you get here, you should have selected a currency pair that you're going to focus on for 12 months, 1 year, 365 days. If you are focusing on USD CAD or UCAD, then you're just going to always make sure first things first, when you're deciding on if you're going to enter in a trade, you want to always know your index. So in your beginners folder, there is a PDF in there that goes over the most commonly traded indexes. We don't normally or typically trade any of the exotic pairs. So we do have the normal pairs listed. So for USD, it's going to be DXY. And you always want to make sure it says currency index.
Soon we will have all the flights adjusted. What a vivid imagination.
You always want to make sure it says currency index. So when we are looking at the index, oh, another thing, I'm glad Debo had said something. Another thing, for being able to follow along is going to be more beneficial than just watching what I'm doing. You want to actually be doing this either on your desktop, your tablet, whatever it may be. You also want to be able to be like mimicking all the movements, especially when Robert is going over a market overview. You always want to be doing it exactly with him. So you minimize one screen and you open up the other screen with your chart, and then you kind of follow along. That's the best way to learn, especially like for people who are very visual. Hands-on is about the best way that you're gonna get this down. But back to what I was doing. So when you're looking at your indexes, you want to pay attention to this little section right here where it says 92.4 and it's changing, but then notice where it says that the dollar is negative because it's red, so it's negative 0.02 or 2%. You always want to pay attention to that. It can also be found over here on the other side of the screen as well. So you have 2 areas where you can find it, but you always want to be paying attention to that. If you see that your currency at any point has hit 10% or greater, 10% or greater, then that is an indication of a true trend. So that means that that particular currency is going to continue in that direction. Say for instance, if this dollar was at 12, 13%, if you were to watch it for a little while, you may see it go from 12, 13% down to 9%, then up to 14%, and so on and so forth. But you will see it continuing to move upwards. So that's one way for you guys to really understand that if it's in a true trend, you want to look for 10% or greater. And then that lets you know that the dollar is either going to continue down, or that particular currency is going to continue down, or it's going to continue up. Very important when you're trading. Now we are looking at UCAD as well. So clear all drawings. And one thing, if you guys take a look at your folder, all of these currency pairs have a common theme, is that it starts off with the name of the dollar, Canadian or US dollar, and then it ends at XY. So really, really easy for you to be able to punch this 3 little letters in. Now you see the Canadian dollar is at a -8%. So the dollar is hovering around -2%, and the Canadian dollar is hovering around -8%. So you want to pay attention to those. You know, your normal math rules will apply when something is negative. The greater the negative, it's not normally stronger. So the closer you are to positive, that's going to be your stronger pair. So very important. You want to remember some of your math rules on that. All right. So right here, we're going to start out with our daily chart. So our daily chart is for direction, and we always mark our daily chart up in burgundy. So you want to come here. You want to make sure that you're on the currency pair that you are wanting to mark up. So you can check over here where it says where you're going to type it in, which is right there. And you can also double check yourself on this side as well, and make sure that you're on the currency pair that you're looking to trade. Just a second. All right, sorry about that. So once you make sure that you're on the correct pair, you also want to make sure that you have your chart set starting off on the 1 day. Now, once you're on your daily chart, remember it is for direction. You can manipulate the chart just a little bit so that you can see. What we're looking for is the noticeable change in direction. So basically, we're looking to see where the candles were going down at one point, and then they begin to go up. So you're looking for your highs and your lows, also known as your support and your resistance. Let me see. So what we're looking at right here is we're looking at the candles go down and then they come up. Sorry about that. Change the color so you guys can see it better. Sorry. There we go. So you're looking for the candles to go down and then come back up. So what this is called is fluctuation of price, because the market has made a nice V. So anytime you see a V pattern in the market, that's going to be your fluctuation of price. And we'll get into that as well. So first things first, let's find our highs and our lows. We're on our daily. Okay, so we never want to look for our resistance or our high in the past. So we never want to go back to something that's old. We never want to go back here. You never want to go back that far. You always want to use your immediate change in direction. So because this is the daily chart, and each one of these candles represents 24 hours or 24 1-hour candles. So each one of these represents a day. So you want to look for your immediate high, which is about right there. Let me make sure I got it right on the top. You'd never want to use the wick, because wicks, this right here, wicks represents price exhaustion. Debo, you can unmute yourself and help out. I don't mind.
Nothing, Queen. I was just agreeing with you. I was just making a statement on when you was talking about the fluctuation of the trend. To capitalize off what you're talking about is to realize what letter is it forming, to understand what that pair is really trying to do from the previous leg. So if you look back at the previous action of the trend, like the green that you don't have marked up, but the balance of the structure came from the downtrend of the bear's move, and it balanced that. It balanced the trend out with that shape to be able to form the V. So now it looks like it's about to create a W or M from where it's respecting the daily resistance. It looked like it's about to form another letter. So that just helps the new beginners understand that the market structure on what it's doing, so you can confirm your analysis by looking at the structure and looking at what letters that it starts to form. That's all I was just throwing out there. So if they reading and listening to you, and they can kind of understand, so they wouldn't ask you questions that you might be explaining already.
Awesome, I appreciate it.
I'm out.
Okay, so after you found your immediate change in direction, your support and your support's down here, and then your resistance, you're going to drop your fibs. So our fibs, that's what we use. Let me pull it up so you guys can see. And all of this again is in your beginners folder. I had it in, I just looked at it too. Okay, so our fibs is what we use to be able to tell us when is a good area for us to get in. It also helps us know when we need, where to look for our retest. So we look for certain patterns or certain movements of the candles. So if your Fibonacci, or your fibs as we like to call them, does not look like this, please feel free to get with someone, and we will make sure that we get your setup the way it needs to be.
Look, there's my baby. There's Mama's baby.
Okay. So once we have our fibs on our chart, because our daily chart does get a fib, and this is going to be the toughest area or the toughest support and resistance for your candles to break through. So once your candles either break your high and low, then you are looking, as long as it meets your checklist, you're probably looking for the market to move in a strong direction, in either a bullish or a bearish direction. So it's very important that we try to be as accurate as possible when we're marking our charts, as well as being knowledgeable of how your particular currency pair moves. So what we're looking for is our 0.382. So it's going to be 1.26698 is where I want to drop that line. Sorry about that. All right, so after you established your high and your low, and then we have our 0.382 marked, what we're gonna do at this point is go to the 4-hour charts. Once we get on the 4-hour charts, which is for our momentum, we're gonna repeat the exact same process. We're always duplicating the process from the daily chart to the 4-hour chart to the 1-hour chart to the 15-minute chart. Now I manipulate my charts just a little bit to see the change in direction. As you can see here, the market has begun to consolidate on the 4-hour chart. Now, what that means is each one of these candles represents 4 hours. So if we look at 4 hours here, 8 hours, 12 hours, 16 hours, so on and so forth back, that means the market has been in consolidation mode for this long. So we want to find our immediate high and our immediate low, or immediate change in direction. And we're going to go from burgundy to red. We're going to always follow the colors in order as we mark our charts, because it just makes it easier for you to be able to go back, read your charts, and see exactly where your highs and lows were and what each one represents. Now on the 4-hour chart, we do not give it a Fibonacci drop. We don't do that on this one. It's strictly for momentum. So you find your immediate change in direction. So you're going to find your high, you're going to find your low, and then you're going to move over to your 1-hour chart. So our 1-hour chart, we're always going to mark up in orange. And the exact same thing. Each one of these candles represents 1 hour or 60 minutes. So on your 1-minute chart, each one of those candles represents 1 minute. So basically it has taken 60 of your 1-minute candles and bundled it up into this one candle. This is a candle as well, it's just not finished yet. But each one of these represents 60 candles, or 2 30-minute candles, however, whichever chart you prefer to watch. But the 1-hour chart is always mimicking what happens on your lower time frames. So here and here. Now, ideally, you do want to mark your charts up on Friday. Reason being is that on Friday, the market is not moving. Do I really want to use that one? I don't really want to use that one, just because this will go ahead and pretty much blow it. Am I right, Debo? Because I feel like that's just gonna go ahead and like take it out.
No, you're right. That's a better one, because the other one's gonna blow as soon as it moves.
Yeah. So if this, no, I was just saying I don't like using this one right now, because I feel like this candle that's coming in it's already below it, and then it's just gonna blow it within maybe an hour or two. So I don't want anyone who's following along and possibly going to trade this pair to blow their chart out before the end of the day or tomorrow.
Oh, okay.
So with this being a Tuesday, that is possible, you guys, that if you're marking your charts up on a weekday while the candles are moving, you can easily, if you get the wrong high or the wrong low, you will notice that it will get blown out, and you're just really gonna have to restart and reset up your charts. So ideally, the pair that you are focused on, like UJ or GU or whoever it might be, you want to mark those up Friday after 5 p.m. By marking them up Friday after 5 p.m., you guys have a better chance of making sure that you have a viable trade from Sunday to at least Thursday, just depending on what the market does. If the market moves above your markups and it blows your daily or it blows your hour or your 4 hour, at that point you may want to consider remarking your chart, but only if that happens. As long as you have candles within your resistance, your support and resistance areas, then you have a viable chart that you can work with. But again, I cannot stress any more than telling you guys to make sure that you are following your checklist. Make sure that you are checking your indexes. Make sure that you are doing your test and your retest before entering into your trades. If you enter into a trade and you're not doing well, you might want to just go back and revisit the beginners folder and your trading plan. Those things are put together for you by Robert to, make you be successful. So, want to utilize everything that's being given to you. Now that we're on the 1 hour chart and we have found our immediate high and our immediate low or support and resistance, you're going to drop another fib. Remember, you drop fibs on the daily chart, the 1 hour chart, and the 15-minute chart. And you want to drop them in the direction of each individual chart. So our daily chart was actually a lot of green candles, so it was bullish. So we went from our low to our high. So we wanted to start at our support and take it all the way up to our resistance to get our 0.382 area. Now, notice on this chart, it is our 1 hour chart, but we have more red candles in a downtrend than we have in an uptrend. Yes, if you go back and you look at this area, you can say that's an uptrend, so I can do it from the swing low to the swing high. You can, but that means you're waiting on the market to go back into a buy. And when will that be? You always want to get in when it's the primal area or when the market is prime. So you always want to buy low and sell high, kind of how it works. So with this being more of a bearish chart, we're going to start at the top and we're going to go from our high to our low, and you want to go to your lines. So you want to go, if you start on orange, you want to put it on the next orange line. You never want to shortchange yourself and stop it like right here on the red, which would have been this one, or on the burgundy up here. If you're on the 1 hour chart, you're going to utilize the 1 hour lines. Okay. So my 0.382 for a bearish chart right now is going to be 1.28659. So that's where I want my line to go, 1.28659. That's where I want that line to go, because this is where I'm going to look for my test and my retest. And if you have any questions, please feel free to ask. Do not hold your questions until the end. No questions, no answers. That means you understand it fully, and we're just gonna move along. So on our 15-minute chart, our 15-minute chart is for our entry. Remember our 1 hour chart, and I forgot to say it, so I apologize. Our 1 hour chart is for our take profit and stop loss. 15-minute chart is for entry. So we're doing the exact same thing. Again, we're gonna look for our immediate change in direction. And I know everybody who's in secret society probably sees what I see, but I won't say anything. Okay, so I'm gonna start with the low. And like I said, we always want to utilize our immediate information. Yes, this is 15, each one of these candles represents 15 minutes in time. 4 of these candles represents an hour. So this is all within the last 6 to 8 hours up in here. But on a 15-minute chart, 8 hours ago is too far back for you to base your support and resistance. So you want to use your immediate information. So if this was Friday, you would probably sit it here, but you also have to take into account when the market starts moving, will it blow your resistance in this, support in this case. So one of the things that Robert did mention to me at one point was that you can look at this immediate right here as your 1 minute low. The next hump is like your 5-minute low, and then your next one will be 15 minutes. So on Friday, if you see that everything is kind of in consolidation and kind of choppy, very short candles, you do want to take that into consideration when marking up your charts. So right now, this is too close. So we're going to move it to where it should be. And then the same for your high. You're looking for the immediate change in direction. And you're gonna drop a fib. Now, there's only 2 candles that are in a bearish state, and then we have 5 candles in a bullish state. So we're gonna go from our swing low to our swing high. So again, that means you're gonna drop it from your support and bring it up to your resistance. And does anybody have any questions about finding your support and resistance to this point?
Nope.
Nope, everybody good? 28471. Always, you guys, when you are doing your charts, I write it down, and I write it down in a way where it creates rope memorization. So I will write daily, direction, and then my fib number. H4, momentum, no fibs. H1, take profit, stop loss, fibs, and then what my fib number was. And the same thing with the 15-minute entry, and then what my fibs, what the number on my fibs was. This actually will help you guys remember when you're looking at your charts that, hey, I'm on my 15-minute chart. I'm solely here for my entry point. That's what your 15-minute chart is for. That's what you're going to use it for. So you want to get that down, because once you guys graduate out of the beginner's class and you guys go into the advanced class, you will not see these trainings other than what you have in your beginner's folder. You will be completely blacked out from beginner's training for 2 weeks, and Robert does not go over this. So with that being said, you do really want to make sure that you're taking all this in. All right. So now that we have this on here and no questions, everybody said they're good, so we're gonna move on. Once you have determined your entry point, which is the 1.28471, what you're gonna be looking for is your test and your retest. So first things first, you don't, as a beginner, you do not really want to look at your wicks. You really don't want to look at your wicks because wicks actually represent exhaustion of price. Yes, the market didn't move up that high or it moved down that low if you're looking for a sale, but it didn't stay there. Something that was going on within the market would not allow the market to stay there. If it did, you would have a blunt or a perfect bottom, like right here. You'd have a blunt bottom. It stayed there. Nothing told it that it needed to go down and then come back up. The market was satisfied with this area, so it stayed there. It did its thing. But wicks mean exhaustion of price. So yes, it went down there, did not stay there. And that's actually going to mean more to you once you get in the follow-up groups. But for now, because everyone is new, if you see long wicks like these, that just means something wouldn't let the market stay there. You might not want to go in that direction. All right. Let me see where I was at. I lost my train of thought. Hold on. Oh, okay. So what we're doing is we're looking for our test. So right here we have 3 candles on our 0.382 and they're red. So let me change it to yellow. What we're looking for is another set. Just do it this way. We're going to look for another set of red candles. So normally I do not look for wicks, but for example purposes, we'll use this set for wicks. And then we have 1, 2, 3 going up on a buy. And this is the easiest way I can explain it to you guys. If you don't really understand it, please let me know and I will, I'll come up with a way to kind of explain it so that you can understand it. So what we're looking for, the market to let us know what it's about to do. Like, are you going to go on a sale or are you going to go on a buy? What is your plan right now? We never want to predict the market. We always want to react to the market. So in order to react to the market, we have to ask ourselves certain questions and we have to see if the market is going to answer those questions, so to speak. So right here, we see that we have 3 green candles on our 0.382 of our entry line, because this is the ideal spot that you want to get in, right? So we see a buy happening right here. And of course, we're like, oh, 3 candles, I need to enter. Yeah, maybe. So maybe not. But we have our 3 candles. So this would be considered active. Now that's given if nothing else was here. Like if nothing else was here. We're like, this is active. We should get in. But we want to always wait for our retest. So you should have this in your minds whenever you're looking at a chart. No retest, no entry. It's just point blank. No retest, no entry. So we have 3 green candles. The market played around up here, around our 1 hour, came back down. Now, it can be the same on the 1 hour. Don't get me wrong. You can do it on either one of your 0.382s, but we're just on our 15-minute chart, so that's why I'm using this one. So we have our 3 green here. Now, what happened is we have 3 red. So 3 red candles on our 0.382 for our 15-minute chart puts these 3 candles that's on a buy on pause. So that means don't look to buy because we just was told, hold on and wait.
Tina, can you adjust your candles down a little bit? Just sort of look a little, yeah.
Does that help?
That way okay. So you can see a little better.
Yes, that's a lot better. I thought it was my screen.
No, I do that. Sorry.
Thanks, Queen.
You're welcome.
So this was actually active at one point. Now it's on pause, and it's on pause because we have 3 red candles hitting the exact same line. And they became active. So I'll just duplicate that. Clone. Okay, so active 1 is now on pause. Yeah. So this one's active. This means that it's on pause. Now, if you come over here, now we have 3 more green candles. So these 3 actually will now go active. Let me make sure I do it right. Active 2. No, this is active 3. Once you guys like actually do this a lot, it'll be easier and you'll move through it real quick. So these 3 green candles will put this active number 2 on pause. Now, there's a lot that happened in between that. This is the past, but just for example purposes only, this is why I'm using it. So these 3 are now on pause because of this one. Now this one goes on pause because of these 3. And then these 3 actually will pause and cancel this one. And I kind of just understand it, so bear with me. If you have questions, please go ahead and answer, because this seems to be one of the major things that people don't get right away.
Basically, she's just giving you guys a glimpse of some of the advanced training.
Nope, this is in beginners.
Was it?
Yeah.
Oh, I remember doing it in advance. I'm sorry.
Yeah, we went over it a lot in advance, but I did it he went over it in beginner. So when you have, like right here, since this is more of our immediate information, you have this one here and this one here. So you have your confirmed downtrend. So at this point, you would look at the remaining items on your checklist, and you will decide whether or not you want to get into that trade at that point. If for some reason we get 3 green candles, that's going to come in and go up from here, then what that means for us is that this set of candles is now on pause and we have a confirmed uptrend. Now, this is our 15-minute chart. This is going to be where you're going to see changes or fluctuation of price a lot. You're going to like run your head in circles trying to figure out, do I get in? Do I get out? Do I get in? You're going to see that. So with that information, we never enter into our trade on the 15-minute chart. Does anybody have questions about not entering in on the 15-minute chart? Yes, no, maybe. Okay.
Yeah, then when are we supposed to enter?
So we're using the 15-minute numbers. Let me get out of this. We're using the 15-minute numbers, but you want to enter into your trade on the 1-hour chart. You enter into your trade on the 1-hour chart because that's 60 candles. Each one of these are 60 candles. So 60 minutes, a full hour. If you get in on the 15-minute chart, you're not going to acquire as many pips as you're wanting. So we always want to do a 3-to-1 ratio. So by doing a 3-to-1 ratio, you're going to risk 1 pip to gain 3 pips. But if you're on a 1-minute chart, 5-minute chart, or 15-minute chart, you're probably on to gain like 10 to 15 pips on that in that candle movement. So that's not what you really want to do. So you always enter in on the 1 minute chart. I mean, the 1 hour chart, sorry, the 1 hour chart. You always want to enter in a 1 hour chart. So when we're looking at it, it's the same. Like you have your 3 here, then you have your 3 there. And if you see it, you have a buy and then you have it put on pause for the sale. So your buy has been stopped for the sale. So for 1, 2, 3, 4,
Okay.
5, 6, 7, 8 hours, it's been in a sale. But if you entered into it on the 15-minute chart, and I mean, you can do the math on 15 to get 8 hours, wherever that may fall. But look how much movement it did, up and down, up and down.
Yeah.
So it doesn't make sense to do it on the 15-minute chart. Because you would have, say for instance, entered here, and you would have caught some nice little movement up there, which Robert is so fluent with this, with these little things here. But if you got in here and went here, that's only 11 pips. So at a 0.01, 10 cent per pip, that's only $1.10. If you go to your 1 hour chart, let's see, and say you got in here and you rode the buy all the way up here, same time frame, but look how many pips you have. You have 69 pips.
Yeah.
So your $1.10 is now $6.97. Does that help? Does it make sense?
Yes, it did help.
Okay. Also, you guys, if you are following along, I forgot to mention, these aren't your normal candles. Your normal candles would look like this, which actually shows you the real fluctuation of price, which gave me PTSD. So Robert has introduced us, or me, and Chastity and some other people, to the Hikinashi candles. Basically, the Hikinashi candles removes the visual fluctuation of price so that you can find your highs and lows easier, and you can see the direction of the chart easier. So even though there was some pullbacks that took place within this time frame, for the most part, it was on an uptrend. So it makes it easier to follow along. It actually will help you keep your sanity. Chastity, Debo, Candace, am I doing it right?
What?
Of course.
The queen.
All right. Okay. So.
Hey, Chastity, or not Chastity, Tina.
Yes.
Show them the difference of the price on the 15-minute time frame compared to the hour time frame. So that's why we generally enter it on the hour time frame. So the price on the hour 15-minute is, I can't see what's that. What's the current price? 128,374.
Yes.
Now go to the hour time frame.
Okay. It's 128.
Oh, it's the same. Okay, go. Okay, so what usually happens is that because right now it's moving pretty solid. So on the hour time frame, the price levels can be different, because what's happening is the orders are accumulating on that smaller time frame. God damn. The orders are accumulating on that smaller time frame. So what'll happen is you see a lot of fluctuation of price on a 15-minute chart. And the fluctuation of price generally is what traps you in trades. Okay, so when I say find the entry on a 15-minute chart, that's just looking for basically the price level to enter in. But if you go on your MetaTrader 4 and you're on your MetaTrader 4 chart, you'll see that if you get on an hour time frame and you click, there's a little plus sign to the top right corner, and what it'll basically do is it'll enter you on that hour time frame. But if you just click on where the quotes are, and you click on where those quotes are, and you click enter, it's going to automatically enter you on that 15-minute chart. So what you want to see is, even if you got a demo account, you can back test and you can enter the same trade on the 15-minute chart and the hour chart. The hour chart or the hour entry is going to move a lot slower than the 15-minute entry would. So therefore, you see more fluctuation of price on that smaller time frame than you would on the hour time frame. So theoretically, that's why we like to enter on the hour chart. So therefore, you can catch the full move rather than the fluctuation of price. Because what it's going to do is it's going to kind of trick your psychology into you getting out of that trade a lot sooner than you naturally would. So that's something that we'll start to really talk about it a little bit more. And I know some of y'all is on your way out to the next group. And then the next groups, I'll be I'll be training you guys too in those other groups. Right now, this is kind of giving you the foundation that you really need to know the basics and the basic principles and things like that. So just make sure y'all ask those questions too, because that's how you're gonna really learn this shit. You know, don't try to hold it in, and if you don't get something, say something. You know. And another thing, I don't mean to cut you off. We don't let you go back in, Tina. But basically, I'm always on here monitoring too. So if y'all got some questions that the ladies can't answer or Debo can't answer, I'll be able to let you know. So I'm here. I'm in the shadows, but I'm here. I'm watching y'all. So yeah, just put in work, man. Any questions? Make sure y'all ask them. But you go ahead, chat. Or you can go ahead, Tina. I'm gonna mute my mic back.
Okay. So this is how I normally am able to get people to see the difference. So if you look at the 15-minute entry, you always, like I say, do the 3-to-1 ratio. If you notice, our stop loss is right up here. So the red is your stop loss. Green is your profit. So the red line, it wants you to stop once you hit 1.28523. That's the maximum amount of pips that you want to lose. So you're saying you're okay with losing 5 pips to gain 15 pips in this scenario. And this is if you enter into on the 15-minute chart. If you enter in on the 1-minute chart, the 1 hour chart, you're risking 6 pips to gain 18. And you want to get as close to 3 as you can possibly get, but I'm not able to get there. Like, I'm not able to get a dead set 3, and this is about as close as I can get. So you're risking 6 pips to gain 18 pips, and that's really evident if you enter it in on the 1 hour chart. And as you can see, if you enter it in on the 15-minute chart, you're risking 5 to gain 15 pips. And you know, that's kind of how it works, so to speak. Do you have questions on that part? Anybody? No? Okay. So when you are risking pips that are on the top side and you're gaining pips on the bottom side, so this is your risk, this is your take profit, this is called a short position or sell. So if you are trying to sell, you always want to make sure the red is on top, the green is on bottom. Vice versa. If you are on a buy, then you are doing what is called a long position. Your green is on top and your red is on bottom. And I apologize, I didn't realize people didn't understand that in the previous trainings. So I just wanted to make that ultra clear. Green is your take profit and red is your stop loss. So I tell people never to move the green side. You always want to, I always like to keep it the way I'm taught. I'm sorry, I'm just one of those people. I follow directions to a T. I've never seen Robert move this around. I've always seen him move the red to get the ratio 3-to-1. So if I show you how to do it, I'm showing you the way I was taught. So you always want it to be 3-to-1 ratio. You always just want to minimize the red as much as possible to get to that 2.97. So as you can see, the red becomes small for all of this green. 22 pips, gain 22 pips and only lose 7 pips. You always really, really, really want to practice proper risk management. All right. So in your beginners folder, there is your patterns. There's your patterns. We're always looking for a proper market structure. Now, I really wanted to use GU when I started, and Robert was like, UJ follows structure. So I didn't go against the grain. I am following UJ because he said it follows structure. So here's the structure.
I want to get the grain.
She went against the grain. I didn't. But you're always wanting to look to see these patterns here. You're always looking for those patterns, the VMW. As you can see, if you had noticed, UCAD had a V on the daily chart, which is your fluctuation of price. The next move you're looking for is for that V to turn into either a W or M. Now, just because the V is right side up, that doesn't mean that it's forming an automatic W, because it can form an M, so to speak. I think Robert calls it a triple top or something. I can't remember exactly, but like a triple top or a triple bottom. So that can happen. So as you can see, we have the first movement here, and then here's your inverted V. So now we have 1, 2, and then you have the next movement there. So now we have our W. So you go from fluctuation of price, and a W represents a bullish reversal when the neckline breaks out. Clear all drawings. So basically, if you have a W, bullish means a buy. This is what you're looking for. You're looking for your neckline to get broken. This is an area of resistance. So just like we marked up our charts, just like we marked up the chart over here, the 15-minute had it. Hold on. So this was reversed. This is your M, but same concept. It's just the W upside down. So we have our M here, and then you look for the neckline to get broken, which is right along here. You're looking for it to break the neckline, and because W is bullish, so M is bearish. So you're looking for it to go on the sell. And if you notice, we have our M, and what happened? It went for the sell.
Mm-hmm.
Does anybody have questions on that? No? Kind of easy peasy? Okay. On the daily chart, you guys, if you had noticed, see if I can remove this. I'm trying to make sure my chart don't be messy for you guys, so that if you need to go back and look at it, it's not all big jumble mess for you. But if we go to our daily chart, I had pointed out earlier that there was a V. And it had a nice looking V. I see that, but I'm not gonna say nothing. Okay, so it has this nice looking V, which is fluctuation of price. So if you're looking to hold a trade for, a couple of days to a week or so, the daily chart and further up is what you're gonna utilize. But you see the V, so we're looking for it to come down here. And then we're looking for it to, at some point, retest off of the daily support and come back up. And then the main thing that we're looking for, because this forms a W, for it to break this neckline here. Change it. It doesn't work.
That's 2 points of profit that you can make.
So you're looking for it to break this neckline and then shoot up into the bullish position. You looking for it to do that. But that's something that Robert actually goes into more depth if you are wanting to position trade or hold a trade over more than just a day or a few hours. If you're holding a trade less than an hour to 2 hours, it's considered scalping. But if you are looking to make long money, then you are looking to hold a trade for, you know, at least a day or two. So we never trade on Sunday and Monday because Sunday and Monday are trap days, even though the market opens up. And sometimes we will get into a trade on Sunday and Monday, but Robert normally lets us know if the market is actually primed to actually get on a trade those days. If not, then stick to your trading plan, which is Tuesday, Wednesday, and Thursday. It is set up for you to be able to double your account if you just follow the directions. Just a second. Does anybody have questions about fluctuation of price, when to get in a trade, especially your test and retest? That seems to really get a lot of people when they're sitting by themselves. So that's kind of really important. Important that you understand those things, because like I tell you, Robert's not going to go over this again once you get into the advanced. He's going to say, hold on, let me mark my chart up real quick. And he's like, I'm just going to run through this. He's like, I'm not going to skip any steps. You know, he's just going to be moving on. So you guys really, really like truly need to have this down before you move into your advanced. Yanni, did you have any questions? I know you just popped in not too long ago, but.
I've been here.
Okay, I'm sorry, I didn't see you.
It's okay. It's okay. Can you go over? I know you guys have the chart. The bullish on like when to actually enter a trade. I know we enter in on an hour, 1 hour chart. But I guess my question is, how do you actually know after you do the retest when it's best to enter in? Can you show us that?
So you never want to set up a pending order, because even though you see your 0.382 and you know your numbers, you never really want to enter into a pending order. So what we do actually is you're going to set up your call levels app on your phone, and you're going to get an alert when it hits the 1.28471 area. And at that point, you're going to go and see, do I have my confirmations? You really want to double back and look at your checklist. What that means is you want to look at, you want to see if, oh, y'all making me think y'all got questions because the little thing flashing orange. But you really want to see if you have your test and your retest. So looking at UCAD right now, knowing that I'm going to enter in on my 1 hour chart, and I'm right here at the 15-minute entry point. So I see this. Okay, good. I got my bullish. Then I see this one. 1, 2, 3. I have a bearish. So for me, I'll change the color. So for me, I know that it's not time to enter. Even though my call alert went off, it's not time to enter because I have a buy that's now on pause for a sale that's currently happening. So what I'm looking for now, I have 1, 2, I have a green, and I have 1, 2. I need to see another red candle come in down here. If I see another red candle come in within that little box, like a red candle come in right here, then I'm saying, okay, I have my first test and then I have my retest. So I have my 1 and then I have my 2. And at that point, I'm going to enter in on the trade. So once you got the call alert right, once you got your call alert around here, you want to start looking at your trade and you're going to watch it. I mean, I understand everybody wants to be hands-free on this, but if you're going to be a true trader, you're going to have to actually dedicate at least 3 to 4 hours a day getting yourself set up for your trades. That's either watching it, or if you're actively in a trade, watching your active trade. Because just because you have this going on here, you're going to have pullbacks. But at the same time, if you are studying your candle patterns and things, and you start seeing indecision candles, or you start seeing dojis, things like that, which you guys will learn as you go through, those are going to be some key indicators to let you guys know that you need to get out. Okay, then thank you. You also want to remember that right now is our Asian session, which is our retracement session. So if you look at the hours here, you have all these hours, and somewhere in there is our New York session. If we go back, so we're at 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, 12, 11, 10, 9, 8. So here to, I forgot where 5 was. Up in this range here is your New York session. So the new trend was started. So everything that happened during the New York session or the new trend can actually get reversed during the Asian session, because that's retracement session. Uh-oh, I clicked on it and now I'm stuck. How do I get out of this? Anybody?
Where you stuck at, Queen? What you click on?
It hit, because I accidentally hit optimize share for full screen video clip.
Oh.
It's okay, I can work with it, it's fine. I'll work with it.